This is Jim. It's 12:17 p.m. in San Francisco, California on May the 3rd. Please note that all discussions, analysis, and information presented are for general informational and educational purposes only and should not be construed as financial or any other form of professional advice. So that tracked really well down into this 12:10 p.m. Zone of weakness here. You can see that big red bar right on the bullseye, and then the second bar here. Looks like we're bouncing a little bit right now. I'm not watching Powell, but I would imagine that this sell-off will be attributed to something that he said, I guess. I don't know. Anyway, no idea why that works, but it seems to work. Here's our next zone of weakness today, 1240. And then we've got a zone of weakness tomorrow into about 717. This retest that I listed at 33,365, I cleaned it up a little bit. It's more like 33,345. So I went ahead and adjusted that and show that here on the board. Point of origin on that one is right here, late session, or no, the opening trading bar on the 5-minute chart on April 27th. So there'll be a gap there for other people to see that are using regular, standard technical analysis 101. So, this isn't really as much of a hidden retest as we usually have. But anyway, you guys know how we generate those, right? This is the trend line. That's the fast market break. Never looks back, never does the bull versus bear battleground that it needs to do, A, B, C, D, E vibration sequence at a bare bones minimum. And so therefore, we track that, and looks like this is where I came up. Let's see. Anyway, we track that and assume that it's going to happen in the future. Here's a second retest level, just if you guys want to see how I do this. And so this one, it looks like, excuse me, is at the, let's call this one, 33,415. That's what that looks like. Everything's running really, really slow here with the busy markets like this. So anyway, what did I just say, you guys? Sorry. 33,415. All right, let's just do that. You guys know RT just means retest. So I'm going to bounce over to the 60-minute chart and show you something on the SPY that might be of interest to you guys. The other thing here is that if we back up a little bit on this 5-minute and we look at this most recent high, so this is the structure that we're tracking here. So this is the May 1st high. So you can see this red downtrend line, obviously. And excuse me, you guys. And then our speed line here, very steep trajectory on that speed line. We did see a nice A, B, C, D, E. Okay, so if you guys wanted to use my sort of wilt buy and sell trigger, candle through vibration, you can see that really nice. God dang it. You can see that really nice red candle. I don't love the way that didn't paint mid candle. This one was more your wilt right here. But you didn't close in the bottom end of the range. Then this one's lower. Anyway, you guys get the point. You guys know how to use this. Once you see the A, B, C, D, E, your vibration's done. So if you break back below that vibration level, in this case, vibration was, let's see, call it 33,680. Looks like we're making session lows here. So this is really beautiful tracking here. Hopefully you guys caught this. Do me a favor. If either something you're doing on your own using some of the stuff that I showed you as far as my behavioral analysis approach is helping you, or my specific zones of strength and weakness, those forecasts are helping you, let's move this down. You guys do me a favor and either DM me every now and then or or tweet it out. I need to fight against all the trolls that just constantly trash me on Twitter, because actually it hurts my name and my brand. When I was behind the scenes, I never had to deal with any of this stuff. And so if you have a, someone wade into Twitter and read some of the comments, it makes it look like we're never doing well here. So if this is helping you out, do me a favor and mention it. Thanks. Anyway, if you guys think in terms of these retest levels that we have here into later today and then tomorrow morning, typically you guys know retest levels hit and then it becomes vibration. So it makes sense that this should be noisy in here. It basically would be a break of this low and sort of that, struggle to bring in bottom feeders and all of that, even if we're going to roll over and make lower lows. So it makes sense that to see some bull versus bear vibration here. That also will end up looking like a bear crawl, because you guys can see this clean break and then we tap here. Well, you break through that low, and this argues for a bear crawl down this red downtrend line at the very least. If we slip through that, if we have a very short-lived bull versus bear battleground around these retest levels, assuming we're going to hit these retest levels, and the vibration is short-lived or it unfolds very quickly and we break below this red downtrend line, you guys understand that would be considered re-entry into an expanding megaphone crash fractal right here. And then price would want to attack this white speed line, which you guys can see the trajectory here. You can create a chart on your side and take a look at where that resides, but it would be much lower. I think it would probably also fit well with that target that I came up with for next week, which is a really bearish target for the Dow, 10% plus decline. Here's the SPY 60-minute setup, you guys. You can see this high that was posted back in early February. And the fact that price was not able to get above that high means that this fractal is completely intact. So here's your downtrend line there. Here's your speed line. Obviously, if you even bear crawl down this downtrend line, it brings these lows back into play, December and March lows into play. And if you were to break below that, that's a full-blown, crash setup. The reason I'm listing this 402 as a retest level here in the SPY, even though you guys can clearly see right here that we had a trend break and what the old timers call a kiss back, is that you guys remember, I want to see two things in a retest level. I want to see and the vibration sequence. I want to see that the hidden retest level hit, number one. And then I want to see the vibration sequence. But importantly, if you see a single tap on a hidden retest level like this, but it doesn't sync up at all with the Fibonacci time series, and you can just use these time extension tools. So you basically go point of origin, and then your next mark here is exactly where price thrusts up through this downtrend line. If that bull versus bear battleground, or even a single retest level, is not staged well within the outer limits of this 38.2% time window here, then I go ahead and I mark this in magenta, designated in magenta, and I call it a hidden retest level, even though technically speaking, this was a hidden retest level. So it would be more like an A, B, C, and we're looking for a D and an E wave on that 402. But you guys know that's not enough of a bull versus bear battleground right there. It's basically 1, 2, 3, 4, 5, looks like 5 or 6 hours of trading activity against 2 months of trading activity. So again, the key to the vibration sequence as far as time is that if it's not taking at least 38% of the amount of time it took for this downtrend line to unfold into the trend break, then you always need to be watching that 402 to be revisited. Whereas some people would think, using technical analysis, hey, here's a trend break, here's a beautiful retest. That's what they call the retest. The old timers call it the kiss back. And then you're ready to move on to a breakout and everything's lovely. we know using behavioral analysis that there needs to be a lot more work done as far as the bull versus bear battleground at this 402 level. So that's what that's all about. The other thing I wanted to bring to your attention is, you guys, if you subscribe to the AMC, or you're a Global Pro subscriber and have access to my AMC videos, you know that I do a kind of a heavy focus for that group on volume characteristics, and again, using my sort of behavioral analysis approach to things. So basically, we're drawing a trend line off of these volume bar spike highs. Again, I love to focus on the 60-minute. You can apply this to a 5-minute price bar, or a 1-minute price bar, and the subsequent volume related to those. But I like the 60-minute. It tends to create, at least swing trades, if not bigger picture. So what you want to look at is this downtrend line, and then I call this horizontal white line nesting or resting volume. And it's simply, as you look at the low volume peaks down here, like see this series of peaks right here, and these peaks here, all the low volume peaks, if you can find sort of some decent consistency in those valley peaks. That sounds a little weird, but they are the peaks within the valleys, and you use that as your resting or nesting volume. Anytime this downtrend line collides through the nesting or resting volume, you're expecting to see a breakout if it didn't come a little earlier. In this case, you can see these persistent higher high volume spikes. So we're breaking out a little earlier, but a lot of times it will move and sort of bunch down and cluster and coil up right into this period here, in which case this would tell us that 5-5, a couple hours into the 5-5 toward the end of the trading session is where you can really start to see volume explode. So that would be next week. Also tells us that really no matter what kind of happens in here as far as volume picking up, that we should look for, based on behavioral analysis, we should expect and anticipate that volume will become even more dynamic here as we trade into next week. The other thing I like to look at is I want to see a good indication of trend. See, so here we're still really technically stuck in a price range. If you really want to kind of look at the meaty part of sort of price, you can make a good argument that we're stuck in a price range here, and really no indication of direction breaking out or to the upside or the downside. Whereas if we focus on these volume bars, and if the downside, so the red closing 60-minute bars, are engulfing any of these volume spikes that are associated with green bars, and whereas a few of these are reds, one in there at least is a green. Let's see which one it is. So that first one was a red. That guy's a green. That guy's a green. So these two right in here, that started to look like a pretty healthy advance. But then as soon as we saw this red bar engulf those previous green bars as far as the volume, you knew that at the very least you should be neutral, if not, suspicious that this thing's starting a new downtrend and that was a false breakout. We just confirmed that again with another big red bar here that exceeded the previous red bar. So, it looks to me like this is going to track the BAM model, and we are going to see a nasty decline, moving forward, and that it will come coincident with a heavier volume, which is always a little dicey. If you guys have followed me for a while, you know that when I dissected the 1987 crash, that what you'll find if you look at 60-minute bars, as opposed to just looking at the volume at the end of the trading session, that when you do start to crash, you will see a high volume 60-minute bar to kick off the crash leg before it even starts to break down. But then once you're in the crash and really making price progress, let's say, 5%, 7%, 12% single session declines, you'll actually see that this 60-minute volume starts to pull back a little bit. So it's kind of gives you a good idea about what's going on intraday, so you don't have to wait to see that volume print on the close to have an idea about what's going on. Is the market crashing or melting up or whatever? So again, the misnomer is that crashes are happening on higher volume, the kickoffs on high volume, but toward the middle and the end of the crash, volume will actually subside. It's very rare to see sort of a capitulation in volume at a turning point low. Matter of fact, that just doesn't happen based on what I've seen in true crashes, like a 1987 style crash. It can happen on a 3 to 7%, 1 or 2 session aggressive move up or down. Anyway, that's what things look like on my side, you guys. It looks like this is tracking nicely. And again, you guys have, see, this is tracking beautifully down to this. We've got about 7 more minutes into this bullseye. Anyway, you guys can see, and we're almost at this 33,415 session low, 33,422. So we've almost hit that first retest and well on our way to this second one. So beautiful tracking. I don't know what Powell's saying behind the scenes, but really nice. Hope you guys caught this. Let me know if you did. Good luck.